Good afternoon, everyone. Thank you for joining us for another episode of the Blockchain Advisor. Today we have with us Steve Givot. Steve was already larger than life trader and personality when I began in 1982. Steve, if I remember correctly, cleared Shacken. My memories of you were always very fond. Maybe we've had a handful, 2 or 3 conversations, over the last 40 some years, but I do remember you being, one of the good guys and funny, hilarious, but also very serious at the same time. So thank you so much for joining us today. I want to, talk a little bit about your background, what your memories are of the CBOE as a floor trader, and let's just get right into it. All right, man?
Okay.
Good. All right. So Steve, take us back to day one. Where were you born? Where did you grow up? What were your hobbies? What made the CBOE seem interesting? Who backed you? Let's kind of get into some of those early days of the 70s when Black Scholes model was new and people were trying to figure it out. And the exchange was started in some coffee shop, basically a small office down the street. So let's talk about those days and what you remember.
Well, I was born in the south side of Chicago, and when the Great White Flight occurred from South Shore, we moved up to Evanston, Skokie area. I finished up my education at Evans Township High School, went to MIT and majored in computer science, and then decided, okay, so I need an MBA to make money, because nobody ever thought they'd make a lot of money writing computer programs. So in the middle of my first year at the business school at Chicago, I heard that there was an opportunity to go abroad for a year, and I never turned down the opportunity to travel. So I earned a Master in Science degree in management science, which is sort of like applying computer science to the business world, from the London School of Economics. When I came back to finish up my MBA, my dad had a buddy of his from grammar school named Jerry Hadoff. Jerry was a member of the Board of Trade. And from time to time, when I was in high school and at MIT, Jerry was like a second father to me. Jerry would call me up and say, hey, have you got a few bucks? Now, mind you, I'm a high school student. Have you got a few bucks? I think we ought to be in, and it was soybeans or wheat. I mean, you couldn't trade gold back then. I mean, that's how long ago this was. And I always gave Jerry money, and I always ended up with a little bit more. I'd give him $1,500 and I'd get back $1,800. And I liked this. This was a good deal. So one day when I was back from London, just barely back from London, Jerry said, I want to have lunch with you. I have an idea. Can you come down to the Board of Trade? He was on the floor. So I came down there, and he took me out to lunch, and he gave me this enormous, I wish I had it here. Okay. It's an enormous stack of papers. Okay. Oh, you can't see these, but I mean, it was like 3 phone books worth of research on options and the history of the options market. And it was like, what's an option? I never heard of that. So he said, well, I want you to read all this, and then we're going to have lunch again. So I started reading through all of this stuff, and it was a very interesting over-the-counter market. And it was about to start up as the CBOE. One of the documents in there that he wanted me to focus on was a little research project that 2 guys at the University of Chicago, actually one was at Chicago, one was at MIT, Fisher Black and Myron Scholes. And they had come up with this crazy mathematical formula to predict the theoretical value of an option. Now, it wasn't the options that would be trading at CBOE, because their model predicted a European settlement option. But
Wait. CBOE had European settlement options? I thought that didn't happen until
their
model.
The model was European.
Right. The model was European, right? Not American style. Okay.
Right. So I went back and I sat down with Jerry, and Jerry said, so what do you think about this? I said, well, if this model is accurate, and if people are just pricing these based on, betting at the racetrack, I think there might be some edge in this because, University of Chicago School of Business, which wasn't Booth then, it was all about efficient markets. And if you could find an inefficiency in a market, you could exploit it. So he said, well, these guys are at the University of Chicago. Why don't you talk to them and see what they know? So I just walked up and knocked on the door. They were in the top floor of one of these old Gothic buildings that Rockefeller had built in the 1890s. And they were across the hall from each other, like in the attic. And they were just really happy that any student had ever heard of this paper.
And what year was this?
1973.
Okay.
It was, actually, it may have been late 72. Okay. And they said, well, we're looking for somebody to figure out whether the initial data at the CBOE actually predicts, matches up with our model. Actually, I'm wrong. This was 73-ish, end of 73, because I graduated in 74. So I said, well, that sounds like an interesting project. And they said, well, would you like your degree with honors? And I said, sure, why not? So we hit a little agreement that I would get the data. They had the data. I would process the data, put it all together, estimate the volatility of the stocks, which there's a thing called CRISP still there at the U of C, which is just mountains of data now. Wasn't so much then. Project the volatility of these 16 issues and look at the closing prices every night, closing price of the stock, and see if they were close. So I spent about 3 months at the data center, most of my off hours. And I came back and I had some numbers and we sat down and the model wasn't tracking the CBOE prices. Everything was too expensive. Everything. Nothing was cheap. Now, we only had calls.
Right.
Everything was expensive. So they checked it out and they didn't find any errors. They didn't think I had misestimated volatility in a way that would explain it. So they said, great, want you to write this up as a paper for your honors paper. And I wrote it up. And the first draft they hated because I didn't know how to write a research paper at their level. So we fixed it up and we put it in good order. And they said, this is great. We're going to publish this. And I said, no, you're not. They said, excuse me? I said, I agreed I would write a paper. I agreed I would do the work. My trade is done. I bought a seat at this place. I'm going to make the market a little more efficient, selling the hell out of this stuff. And I borrowed $40,000 from my dad,
which was a huge amount of money back then.
Small fortune.
It's like a $500,000 today, probably, for being 20 years old.
It was twice what I had paid for my MBA.
Yeah.
Just to put it in perspective, including the trip to London for a year. And I bought a seat for $30,100, which was the high tick at that point in time, price that was never seen again. And I bought a desk and a chair so that I could have a little office at home. And I kept my account open at the Comp Center at the University of Chicago and kept running theoretical values. And I would do delta neutral spreads, selling the stuff that were more overpriced. I mean, you couldn't afford to buy stock because of the commissions. It was before 1975. You buy one share, 100 shares.
$75 or $100 in commissions.
It was 5/8, $62.50.
Okay.
So there's no vigor left in that trade.
Right.
So I started doing it. And for the first few months, I did very poorly because I was trying to guess which way the market was going and I wasn't figuring out the spreads right. Then I started getting it right. And every month, 10 grand, 10 grand, 10 grand. I mean, plus or minus $1,000 it was. And I wasn't trading all 16 stocks around the floor. I was in one or two stocks, and I wasn't taking enormous risk. I wasn't selling tons of out of the money stuff naked. There were people who did that, and they did very well because we're in the middle of an oil embargo. Bottom line is, about a year later, I decided I needed a computer. Now, mind you, the PC hadn't been invented yet.
Yes.
Okay.
Correct.
So I bought a digital equipment PDP-11 computer, which, if you're familiar with computer racks, it's a 2-rack computer, about 2 of these bookcases behind me, wide, okay, taller than me, and 30 inches deep.
What did that set you back? What did that must have been?
40 grand. That was 40 grand. Okay. It had 64K of memory. Okay, 64K.
That's hilarious.
It had 5 meg of hard drive. Okay.
All you're ever going to need for 40 grand. That's all you're ever going to need.
It had something called an acoustic modem, which literally you put your telephone handset in, and where your speaker was, there was a microphone, and where your mouthpiece was, there was a speaker. And I called up Dow Jones News Service every night to get the closing price, high and low.
It's just like out of the movie The Matrix, where you would take the handset and put it into the cradle, and it would connect using that screechy modem sound, and we would download our data. I mean, with it, go ahead. I'm sorry.
And, well, you know, I took the historical data I had from the UFC, and I took the new data, and I started coming up with what I think were very ingenious ways to estimate volatility. Okay. It wasn't just the last 30 days. It was the last year with a weighted average, and I massaged it. I massaged it until the overpricing was predictable. Okay. But it was predictably overpriced based on changes in volatility. Then I had to adjust for early exercise. Then I had to adjust for dividends.
Right.
Okay. And now I have this $40,000 contraption, and I am now the input output, by the way, there were no keyboards and monitors then. It was a teletype. I mean, literally the ones they were using at Western Union.
Right.
Okay. You type on this big, tall box, and it would print out on a roll of paper. And I'd go to the floor with these rolls of paper for my stocks. And, you know, every once in a while I'd look at them, and people would look at me like, what are you doing? There were 1 or 2 other people on the floor that had little pieces of paper. We never talked about those pieces of paper with each other, but I knew what they were doing, and they knew what I was doing, and we weren't going to share that. And we pretty much didn't, we didn't cross borders. Let's put it that way.
You were in the Teledyne pit, or what pits? What
No.
you are when you
I
started?
I started out in Northwest Airlines, Upjohn, and RCA. And then eventually, when we moved to the new trading floor in 75, I ended in Gulf and Western, which owned Paramount Studios. That was the big play. They owned Paramount Studios and New Jersey Zinc, quite a combination, and a shipping line. Kennecott Copper and Texas Gulf. Okay. With the last 2 of which didn't trade very much. It was really all Gulf and Western. And Gulf and Western was probably the most active thing traded on the floor for 2 or 3 years, because it just kept doubling and splitting and doubling and splitting. But weird things happened. I figured out, because Gulf and Western was the first split that CBOE experienced. It was a 2-for-1 split. And I had done the studies that showed that when stocks split, not a stock dividend, but when the option contract splits into many, the volatility almost always goes up, because an eighth is still an eighth.
Got it.
So an eighth's a bigger percentage. Gulf and Western was splitting 2-for-1, and I knew that I wanted to be long volatility But I also knew that stocks tended to rally after they split, and these could be countervailing activities or offsetting activities. So in the days leading up to the split, the position limits were going to double. The number of options I would have were going to double. I bought time spreads. I was limit long time spreads, slightly out of the money, thinking it might rally some. And it worked.
Big.
It worked. The stock split. I mean, I think these spreads were $1.50 before the split. And the next day I had twice as many of them, and they were a little over $1. I made like 50, 60% overnight, very quietly.
So you're long a time spread, which means that you're long a little bit more Vega volatility because you're on the back month, but they're out of the money call spreads, time spreads. So as the stock rallies, you're moving into that short area, which theoretically should expire and decay very quick. So you're long volatility.
Yeah. And even if it doesn't go up, I've got a lot of downside protection because I'm long the farther out.
Yeah.
And it's going to go down slower, especially since it was close to expiration. I mean, it wasn't like a week before expiration.
Got it.
But remember, we had quarterlies back then.
Yes.
So you're talking July and April. If it's sometime in March, you've got 1 month and 4 months. And that's why they ballooned. Well, once I sorted that out and there were more splits around the floor, I would give floor brokers orders because I didn't want anybody to know who it was. And I would buy time spreads. Not a lot. I buy 100 here. I think Teledyne had a big 3-to-1 split at some point in time. That was very nice. I tell you where I did really, really well. Digital equipment was traded on the Amex before the wars. Remember the wars in 76 and 77? There were no dual listings.
Oh, right, exactly.
And then we had a stock, God, it was Magic, a mortgage guarantee company out of Milwaukee.
I don't remember that one.
Amex, you do?
I don't. No, I don't remember Magic.
Nobody cared about it except we wanted to list it, and the Amex listed it, and the SEC didn't stop us. So we had picked it, and then the Amex said, "Well, we're going to trade that too." So Jim Kipp, who was the vice chairman, had a big meeting at the Union League Club and got all of the floor members over there and said, "This is war." Okay, I mean seriously, this is war. He gave us a list of their top 6 issues at the Amex, and we cross-listed them. We duly listed them.
Right. One
of them was Digital Equipment, which is a company I was in love with because I had $40,000 worth of their product sitting in my condo, my apartment. Right. So, and I knew the company because I had worked on their stuff when I was at MIT. It was a great little company. So it was splitting 3-to-1. So I was buying up as a customer lots and lots and lots of time spreads before it was announced as a dual list. So I came in loaded with inventory. The thing split 3-for-1, and I came close to making 70 or 80% on my money on this 3-to-1 split. It was insane.
Right.
And we were just trading incredible quantities of this stuff, bouncing them back and forth. It was a great life.
So how did you transition then as we get a little closer into the 80s? More and more, we had a Monchek Weber, a Schwarzatron, MicroHedge. We had all these other computers were being purchased by clearing firm members and held in a common area so the traders could use them. When did you begin feeling the crunch, or more and more people learning how to use theoretical values? And how did you, most people don't, people can theoretically understand what it means to be short gamma, but until it happens to you, and you lose 5 figures or 6 figures in a couple of seconds because of a stock move, you cannot appreciate how quickly these things sneak up on you. So just give us a little bit of background on how you managed to avert or avoid the big, hurt in positions, and how did your strategies perhaps change as time went on, as we're moving into the 80s in the great bull market? Interest rates 15% going down to 5.
Well, the Greeks didn't really exist in people's minds
right
early on. It was all about delta, and everybody was talking about being delta neutral. My split strategy had nothing to do with delta neutrality. It had to do with the Greeks. We didn't have good formulas to calculate them like we do today. I calculated them the hard way. I calculated the theoretical value, and then I said, okay, if volatility goes up 1 point, what would it do to the theoretical value? If it goes down 1 point, what would it do? And guess what? You've now figured out gamma, right? Okay, and theta. Okay, a day passes. How much is this going to drop? So I had on my sheets by 77 or 78, I had the Greeks. I didn't know what they were called.
Right. But wait, let's just go back a second. So if the volatility goes up 1% or down percent, how the option response to that is Vega, right?
Well, no, hold on a second. You call it Vega. I called it Kappa because I think there is no Vega in the Greek alphabet.
Okay.
Gamma is the change of value
in $1 move or 1 point move.
I'm talking about the change of price.
Got it. Oh, okay. All right, gamma. Got it. Okay.
Right. Okay. So, would you call Vega? I call Kappa, which is the second is the derivative of volatility for that movement. So, but theta, everybody had kind of figured out theta because you see it every day.
Yes.
You look at yesterday's sheets, you look at today's sheets.
Every morning you come in, you're like, okay, there's my theta came in today.
Well, you look at today's sheets and yesterday's sheets at the same $25 price for the stock, and theta's right in your face.
Yeah.
Okay. The one thing I never was comfortable with, and it probably cost me a lot of money, was what was called back spreading. Now, this is in the world of calls, selling a deep in the money call and buying multiple out of the money calls, sort of the reverse of a ratio spread. I was never comfortable having theta work against me. And it was just one simple thing. I never saw a clock move backwards. Now, it doesn't mean I think you can just sell stuff and play the theta game, because God knows we've seen takeovers, we've seen lots of reasons not to do that. But time is the only thing that is absolutely predictable. So I tended to stay away from situations where time would hurt me.
Sure. And how was your relationship with your clearing firm? If I remember, you cleared checking, but that might not have always been true. Did you have to teach them a lesson of, were you called into the office, up at Jim Carney's office saying, Steve, look at your net liquidation value, look at your margin, we need you to cough up money. Our risk parameters are blowing up. Can you even help us rewrite and relearn what our risk parameters should be? I mean, you were like ahead of the game.
Well, yeah, once I wasn't. I started out, I told you this fella, Jerry Hadoff, got me in the business. And the deal was I'd buy a seat and the two of us would go around the floor with all these sheets and we'd make a lot of money. I bought my seat on April 1st, 1974. The exchange had been open a little less than a year. And 2 weeks later, while I was going through the training, they actually trained you then, and passing the tests, Jerry called me and he wanted to have lunch. He told me he was retiring and moving to Guadalajara. I was on my own.
Great town,
Yeah.
but very
Well,
different in 1974. But go ahead.
yeah. Yeah. So I was pretty much on my own. He had me clear through a company called John S. Morris and Company, which was an old line board of trade grain house where Jerry cleared his business.
Okay.
And he introduced me to Mr. Morris, who I think was about 90 years old when I met him, who had, stereo hearing aids, nicest guy on earth, but he knew Jerry and Jerry knew me, and that's all he needed to know.
Right.
And back then, if you were at the board of trade and you had a debit in your account, that's okay. If they knew you, if they liked you, if you weren't doing crazy stuff, they'd give you a chance to get even.
Yep.
Okay. So I never really caused Mr. Morris any problems, but eventually they decided that they didn't need to be in this business. They weren't going to be a Goldberg. They weren't going to be a First Options. They weren't going to be a Scheck, and they had done it as good citizens of the Board of Trade. So I met with Jim Carney. I think by then I was on the CBOE board of directors. So, Scheck had a bit of a reputation for having a lot of the crazy people.
I didn't know that. And I cleared Schecken because I had my first relationship with a trader that backed me, but Schecken, which is the default, I had no say in it. But
when was that?
I started trading in 1982. So Dan Asher backed me.
Sure, I know.
He lent me 20 grand, right, to put me in a brown badge.
Right.
Schecken was Jim Carney, Lee Casty, all great. I met my wife there. I mean, it's always
good people. Good people. At any rate, I met with Jim Carney, and they were trying to, I don't know if the right term is improve their image, but they wanted somebody who was kind of part of the establishment, who had been around for the while, who'd been successful, who wasn't likely to blow them off the face of the earth. And they were very happy to take me in, and we worked out a really favorable commission deal. So I was very happy there. Mm-hmm. Fast forward to the second worst day I've ever had trading. I was doing box spreads when puts came out. Conversions, reversals, and boxes.
Yep. Safe.
Good arbitrage. I had a bit of money in my account, so I was earning good money on it, especially when interest rates were high. Yep. 20% T-bill rates help. And I had on the IBM 240, 280 box. Big. Okay.
Yep.
And the stock went from 270 to 260 to 250. And that's when I learned about early exercise of puts. Now, we knew this could happen, but we didn't know that a $40 box spread could go to 43 really fast. And so I was squeezed. I in 2 or 3 days, I was down to reserves.
Oh my gosh. Okay.
All my money wasn't in my trading account, but all of my trading money was pretty much gone. And Dave,
you were short the 240, 280 box, and your 280 puts were getting deeper and deeper in the money with the potential of early exercise. Got it. Okay.
Oh, no, it was beyond potential.
Okay.
I'm a shareholder in IBM. Okay. Not all of them, but some of them. But I mean, the spread was out to $43. I was not happy. And I knew Dave Goldberg really well because I had cleared through Dave Goldberg on the New York Futures Exchange. And I cleared through Dave Goldberg. I had set up a specialist operation on the Chicago Stock Exchange, and Dave cleared me over there.
Uh-huh.
So Dave kind of knew me. I mean, I wasn't a big customer. And he came on the floor the morning of the big drop in my equity. And he came over to me and said, Steve, is this a G-rated program?
It's for people. I set the setting for 18 or older, so it's
Steve,
you can say whatever you want.
Steve, you look like shit. Are you okay? And I just handed Dave my sheets. I had an $800,000 haircut. And back then, 3 to 1, 2 to 1 was kind of when clearing firms got worried. Mm-hmm. Yeah, I can never was concerned about me. I had an 800 and something $1,000 haircut, and the equity in my account was $96 and change.
Oh my gosh.
I mean,
Right.
you know, another $100 and I'm in liquidation.
Right.
Okay. And Dave said, now I know why you look like shit.
Right.
Because we could see the drop from the day before. He said, so what's your plan? And I said, well, I think I ought to get out of these positions. He said, yeah, but what's your plan? How did you make money? How are you going to make money? And we talked a little bit, and he said, okay. And he gave me one of his board of trading cards, David Goldberg. He says, write your trading rules. And I started writing trading rules because people who survived had trading rules, but I had like let things get out too far. I could have covered these positions when they were going against me. And Dave said, okay, those are good trading rules. I like those trading rules. Now, tell me what percentage of the time you're going to adhere to them. I said, what do you mean? He said, well, if these are your 100% trading rules, the first time you break them, you might as well burn the card. He said, so give yourself some wiggle room, but draw some limits so that you protect yourself. And I said, well, how about 95%? He said, that's a good number. He said, take this card, put it in your pocket, do what you have to get out of these positions, go back to your trading rules. If Shakin doesn't want to clear you anymore, I will. And Dave Goldberg turned me around. Dave Goldberg saved me.
That's terrific. I've heard wonderful things about Dave Goldberg in his relationship with helping people that had tough times. I actually sat on a board with his with Marianne, his wife, a number of years ago, and saw his son Andy, because Dave started the Burling Bank, which now is on the first floor of the Board of Trade. So it was just a great guy, wonderful guy from what I hear.
In fact, I know Andy. Tried to get him to clear. I do consulting. We tried to get him to clear a crypto business, and they.
Oh, stop it. So then the blockchain advisor is the perfect platform for you. This is all right. We're going to have to do coffee, Steve.
I kid you not. At any rate, you know, that's what it was like back then. It was crazy. I mean, I was head of the new products committee. We brought on currency options. I traded those for 2 years, didn't work. We tried bond options, didn't work. But we also tried OEX.
Right.
That was kind of successful. For
sure.
Yeah.
All right. So let's talk about, we're going into the 80s. Were you there for the 87 crash, or had you left already at that time?
That was my worst day.
Okay. Okay. Mine too, but.
That was my, actually 86 was my worst day.
The bull market opened, the gap opening.
In October of 86. Yeah. I had just started trading in OEX, and it seemed to me like it was sort of like shooting cats that are in a box closed up. You just shoot and you hit a cat, right? It just seemed very easy to me. And prior to that, I had never seen a day when the Dow had gone down more than 40 points. So the deal was, when the Dow's down 40, you buy calls, you sell puts, you do whatever, you get long. That day, the Dow went down 70 points before it rallied. And by the time it got down 70 points, I was short boxcar numbers of 3 consecutive strikes of puts. I was having a really bad day. And, you know, I kind of knew what my positions were. I stepped out at one point and just like added everything up. But stuff I had sold at 5 was trading at 10. Stuff I had sold at 1 was trading at 3. I was not doing well. Let's just put it that way. And I'm the new guy in the crowd. I'd been there a few weeks. And of course, nobody's talking to you. Everybody's like a little crazy then. I'm sure some people were like making a lot of money. CRT was in the crowd at the time. And they had, I don't know, 5, 10 people in there, all looking at the same pieces of paper. And if your price was their price, they would do whatever size you wanted because they wanted market share.
Give them a number.
Right. So I remember one of the strikes, I had started selling at 5, and on the screen it was 9 1/4. No, it was 9 3/4, 10 1/2. I mean, that's a crazy wide market for OEX. Okay. And there was a broker named D. I want to say Dean Witter, but I don't remember if they were still around. But D sat sort of next to me, and D started asking for a market in these things. And I was short, I don't know, maybe 200-300 of them at the time. And D asked for a market, and nobody's responding. I'm not even responding. I don't want to sell anything. And she's saying, come on, somebody give me a market. And I don't want to buy them. I don't want to sell them. I say 10 1/4, 11. Nobody else is making a market. D says 10 1/4, 11. I said, yeah. She said, I'll buy them at 11. I said, how many do you have? And she said, 941. I'll never forget that number.
Right.
941. And I said, sold.
Shut up. Okay.
Dollar price averaging, this thing's gonna bounce at some point, hopefully today.
Yes.
941. And like everybody around me, Gil Cantor, all these people are looking at me like, what is he doing to hedge these? If they had asked me, I would say, you see this stuff above?
Right.
It's thin and clear, right? Air. 941. Boom, sold. And that was about 30 seconds before the bottom. And then all of a sudden, all of these people are, can I have some? I said, no. Mm-hmm. Well, what's your market? My market? My market's 9 1/2, 10 1/4.
Right.
And everything fell like a rock. All the puts fell like a rock. And when it got to the point, and I had no idea where my P&L was, no idea at all. I knew what my position was, pretty much. And when the rally kind of started to top out, I went over to the CRT guy next to me, and I asked him what his market in those was. And it was, I don't know, 7 1/2, 8. And I said, I'll buy him. And he said, how many you want to do? And I said, 1,476 or some crazy number. It was a crazy number.
Yeah.
He said, okay. And I said, now the next strike, what's your market in that? And, I bought those back at like 5. And I bought the other ones. I lost money on 2 of the strikes, but on 941, I sold up in the sky.
Right.
I left the crowd and I started figuring out, make sure my position was flat. I didn't figure out my P&L. I didn't want to know. Mm-hmm. And I thought I was flat. And I went downstairs and I checked my code in and I left.
Right. I dry heaved and then I went home.
Nope. It's done.
Yeah.
In the morning, we'll find out. And I came in the next morning and I had made $10,000 on the day. And I had a 10 lot position, which was a miracle that it was that close. And I gave an order to liquidate the 10 lot to Bob Donnelly. And he said, why don't you just come in here and do it? I said, I will never walk in there again. Okay. Mm-hmm. That's my heroin.
Okay.
I can't do this. Nope. This is not where I want to be.
Right. It was a good run while it lasted. All right. So Steve, tell us about your run for office. You had an interest in politics. You made a run for senator,
US
governor.
Senate.
Tell me a little bit about that.
U.S. Senate. Mm-hmm. In 1974 or 84, I ran for the U.S. Senate as a libertarian against Chuck Percy and Paul Simon.
Oh, boy.
I took 7 months off. I owned my own airplane, and I flew that airplane, I'm guessing 250 hours within the state of Illinois in 7 months. I mean, I went to Peoria more times than you can imagine. But we visited every place. We got on TV. The most interesting part of it was the conservative caucus was really big back then. That's when conservatives were really conservatives and not Russians. And they, you're smiling a little bit.
A little bit.
A little bit. They hated Chuck Percy because he was a 3-term liberal Republican. They hated Paul Simon more. Okay.
Right.
And they wanted to find somebody they could put their hands around who agreed with them on a lot of issues. I didn't agree with them on abortion, but that was pretty much it. Mm-hmm. And, I'm not bashful. I contacted them. And I said, how'd you like to have somebody you can support in the state of Illinois to get Chuck Percy unelected? Because that's what they really wanted to do. If Percy had been reelected, he would have been chairman of the Senate Foreign Relations Committee, and they did not want him there. They wanted Jesse Helms. So I flew out with a bunch of people wearing suits from the floor, because you have to look like you had a campaign organization. And these guys bought me lunch at their place in Virginia. And we talked, and they said, well, we have a lot in common here, but what are you going to say about abortion? I said, why would anybody's right mind in 1984 bring up abortion? Really? I mean, all you're going to do is piss off half the people.
Right.
So, I told him I would just avoid the issue.
Roe v. Wade was roughly 10 years prior to that, roughly 74. Yeah. Ronald Reagan, a conservative, it was still very, as it is today. It's an issue that's just not going away, but go ahead.
Right. At any rate, I got back to Chicago, and a week later, they said, a bunch of us are flying to Chicago, and we're going to have a press conference on this date at this time. You cannot be present. But if you happen to be at Nick's Fish Market at 1 o'clock, you might bump into us. Okay, well, I knew what that meant. They were going to endorse me, but they weren't going to contribute a penny to my campaign. They were going to do an independent expenditure. So we really couldn't, as a matter of law, coordinate anything. And sure enough, they came in, and all of a sudden, all the TV stations in Chicago that didn't want to talk to me were calling. So I had a friend come in from California who managed the campaign. We raised a lot of money, and we bought ads. I will tell you, you remember Bob Asher?
Sure.
So Bob was a huge fundraiser for Paul Simon.
Right. And Bob, I think, was also on the board of the Jewish Political Action Committee, I think.
APAC, American Israeli Political Action
Committee. Right, something like that. Mm-hmm.
So my campaign manager, Marshall Fritz, I had 20 people living at my house who flew in from around the country. Libertarians who actually thought it'd be fun if a libertarian was actually.
Did you raise more money from libertarians or from the conservatives?
Well, I'll tell you.
Okay.
No, the conservatives spent $250,000, but I didn't raise it. They sent out mass mailings, multicolor mass mailings to every voter in the state of Illinois. They did wonderful things for me. And I never talked to them. It was all legit. Marshall Fritz, my campaign manager, talks to me one day when I come home, because he's sleeping with 20 other people in my house. And Marshall says, do you know a guy named Bob Asher? I said, yeah, I know Bob Asher. He says, you trust him? I said, yeah, he's on the floor. I trust everybody.
He's a broker on the floor, yeah.
Unless they screwed me once, right? He said, well, Bob Asher called, and he wanted to know if we were planning on running ads, and what kind of ad we would run if we had a bunch of funding. And I said, well, what did Bob indicate? Because I'm sure I know what he's doing, and I'm sure I know what he wants. He said, well, Bob wanted to know if you had a big influx of funding, if you would consider running ads that were silent on Paul Simon. This said nothing bad about Paul Simon, but talked about favorably about yourself and negatively about Chuck Percy. And I said, oh, I don't have a problem with that at all. Okay. So he said, okay, well, I'm going to call Bob back tomorrow. And he said we should start producing ads. So I flew down to Quincy because the TV station there said they'd produce my ad for free if I ran $250 worth of ads in Quincy.
Oh my God.
So, I know, it was
Done.
wonderful. And yeah, done. I mean, it was the gas in the airplane.
Sold, right?
Yeah.
Uh-huh.
So my sister was in advertising. So she did the buys. She asked me all these questions about, what age group we're targeting, typical advertising questions, to which my response was, how the hell should I know?
Right.
I said, buy time. We have 10 days till the election. Be visible. I remember a courier came out to the house and brought Marshall Fritz 41 $1,000 checks. That was the maximum you could contribute, all drawn on different accounts at the same SNL in California. This is like a story you would think somebody wrote, right?
Uh-huh.
But there were 41 $1,000 checks. Obviously, APAC had access to these people's money, and they went limit on 41 times. So now we have to spend $41,000 in a week, which doesn't sound like a lot, but this is 1984.
It's like $500,000 today. I mean,
CNN, half hour, prime time, national, $200. I got $41,000 to spend.
right.
I dumped it on my sister. I said, put it where people will see it. Okay, just put it where people will see it.
Now.
Yes, now. So she bought the Tonight Show. She bought Sunday Football. But the best thing she did that I laugh about was Dick Ogilvy, the former governor of Illinois, was on our board. Dick Thomas, who was the president of First Chicago at the time, was on our board. Dick Thomas, nicest guy you'd ever want to know. He would sit next to me at the board meetings and ask me, what is this about? Because he didn't have time to.
Right. Give me the cliff notes, the executive summary.
Ogilvy hated my ass because I was running against his buddy, Chuck Percy. The day before the election, I walk into a board meeting and our chairman, Wally Auk, and Dick Ogilvy are on the other side of the room speaking loudly. And Wally and Dick live in the same building. They lived at 1040 Lakeshore, the condo building.
Okay.
And they were good buddies. And one of them said to the other, I was watching, and whatever is the Chicago Sunday morning local political affairs program, or no, Meet the Press, the national program, but in the local market is where my sister bought. And she said, I turned on Channel 5 and there was Givett. And Ogilvy said, yeah, me too. That was disgusting. So I turned to 2. Fucking Givett was there too. They turned to 7 and I was there. She bought that stretch of time so she'd get everybody. And I walked in and I said, I guess the advertising worked, guys. Everybody saw it.
That's great. That's great.
Yeah, we got 1.25% of the votes, which was at that time a record for a libertarian in a statewide race. 59,777 votes. It was fun. It was a learning curve.
Sure. All right. So what about today, Steve? Take us to, 2000 and beyond, or like what has occupied your time? Where do you find your interest in your heart? What do you, obviously you're sharp as a tack. You're still staying engaged in learning. This has been an incredibly delightful conversation, but let us, tell us a little bit about what you're doing today, if you can share that.
I'll go fast forward. I got divorced in 87. I had 3 kids, and the kids lived with me half the time. So I worked from home from 87 to, I don't know, in the 90s.
Mm-hmm.
Okay. Taking care of the kids, doing a little trading, and managing the specials business I'd started up at the Chicago Stock Exchange, which became my bread and butter. Okay. That pretty much ended with Reg NMS because you didn't have specialists anymore on regional exchanges. I worked a bit. I did some consulting. I did some consulting for the Stock Exchange in London on their options program. I worked for the Boston Options Exchange for a while. I worked for a prop trading firm in Chicago for a while. And then in 2010, having been on the Chicago Stock Exchange as a member from 79 to 2006, John Caron, their president, reached out to me and asked me if I wanted to come on board. I said, what do you want me to do? He said, we need someone who understands trading and understands computers, that's me, right? We want somebody to write an automated system to test our matching engine to make sure we're compliant with the rules. Completely different application of computers to trading, but that sounded like fun. So I spent 8 years at the Chicago Stock Exchange. Within a year and a half, I continued to do the systems compliance stuff. Within a year and a half, I was vice president for strategic planning because they had no plan, and I kept coming up with ideas, and they didn't have anybody to run them by, who, to develop them. So I did both. The Chicago Stock Exchange was under contract to be acquired by a Chinese firm and some U.S. investors, including myself, and Trump killed that. End up being bought by NYSE or ICE.
Mm-hmm.
In the 8 years I was there, the stock price went up from at $1 to 104 on the.
Wow.
We had Chicago Stock, NYSE has 10 patents that have my name on them for trading innovations.
How exciting.
Largely, we think NYSE bought us because they didn't want us to implement the patents, one of which was an asymmetric speed bump in the equities market. In the last 2 years, I've been doing consulting in the crypto space. First with John Caron, who became the CEO at the Chicago Stock Exchange. John's my good friend. So we do consulting in tandem in the crypto space. The first firm we worked for wasn't a good fit. We were concerned as to whether or not they could put things together.
Sure.
So we're now working for a New York-based client, and I can't tell you everything we're doing, but we expect to have a crypto offering that will set the bar.
Well, you're talking my language. I mean, I am so far down this rabbit hole of cryptocurrency. I can't.
We've applied for 5 patents, 2 of which, I'm 10 for 10 on patents, which is hard in business methods patents. We filed for 5 just to plant a flag, but I think we're going to take 2 to the finish line. And if we have them, we will have things that nobody has and that everybody's going to want.
And do you think this will come out as a cryptocurrency exchange and you don't have to say it, don't reveal anything with the patents there, or are you talking about an actual decentralized token that will have some interesting governance? Okay.
We're not in what I'll call the fringe space.
Okay.
We're not creating tokens. We're talking about having a place to trade.
Got it.
A place to trade, which, because of these patents, will be more efficient and less costly.
Good. And so
when I was on the CBOE board, the thing we kept hearing over and over again from the wirehouses was cheaper, faster, better. Okay.
Yeah.
I will tell you what we're talking about won't be faster. It'll be faster than a decentralized exchange because, a tortoise is faster than a decentralized exchange in terms of settlement. But cheaper and faster, you bet.
And so briefly, then let's close with this question. When did you learn about cryptocurrency and blockchain technology, and what made you go in this direction? Because for me, once I saw how price and settlement and transaction all occur in one action, I thought about the CBOE and OCC and stopping trading at 3:15, and this whole settlement checkout trade thing. It was an instant light went on for me. I mean, I got it very quickly. What about you?
I get it too. I would separate two aspects. One is use of the blockchain as a replacement for OCC or DTCC, whatever, just as a clearance and settlement mechanism. That's you can't tamper with it. Okay. And that's on one point of view. And the other is trading these things.
Right.
Okay. You don't have to trade these things and clear and settle them on the blockchain. Okay. And you see that in the centralized exchanges where people deposit the underlying assets, but the underlying assets sit in a common tank, if you will, as collateral, and they trade back and forth. But they don't necessarily change ownership out on the blockchain. So to me, those centralized exchanges that do that are like casinos. And I don't mean in terms of gambling and speculation.
Right.
You walk into a casino and you give them your dollars. You get a bunch of chips. And now you use these chips. You go wherever you want to, this table, that table. And when you're all done, you go back to the cage and you get your dollars. Okay?
Right.
The dollars never change hands. The chips change hands. Okay? And that's where the market could be and is quite efficient. The fact that the blockchain supporting Bitcoin is consuming the same amount of electricity as the country of Chile concerns me. Okay? This decentralized method for clearing and settling is very expensive. Okay?
If it's done with proof of work like that, yes, but
yes, proof of work.
And we can get into this conversation on another episode, but like the Lightning Network is very similar to what you're discussing, is that you deposit money in an account, you open up a channel, you're buying and selling and transacting, and then you kind of settle up at the end of the evening, which is kind of like getting your money back for the chips. But we can have, we're going to do a second episode on that if you'd like. I'd love to talk more about it.
I'd be happy to. But the key to me is that if I can't trade all day, all night, and the next day, and the next night when I want, and then not trade for 5 days, if I can do all that, and if I can avoid the expense of a blockchain transaction,
yes,
okay, then I'm a happy camper.
Got it.
But that means I have to trust the people who are holding the chips in the cage. Okay?
Right.
So how do you end up? Here's the $50,000 question. How do you end up with a system where you can trust the people holding the chips? If you can solve that problem, then you don't need the blockchain, except when you actually want the cash.
Right. This is interesting paradox because blockchain is it's a trustless system. Like we don't want to trust the centralized system to hold our tokens, right? To hold that collateral. I see both sides, Steve. Don't get me wrong. I'm not trying to make a case here for or against it or proof of stake, where you don't have that electrical cost, but still Interesting paradox here, and we're going to have to talk about this on another episode. Steve, is there, in closing, is there anything you'd like to shamelessly promote? Any projects you want to talk about? Any way you want people to contact you, or don't call me?
So I'm going to give you something completely off the wall.
Okay.
You said anything I want to promote.
Yes.
It is Tuesday, Wednesday, Thursday. It is Thursday. It is 3:36 p.m. Sunday morning, I'm going to be on a flight to Chicago, to Frankfurt, to Warsaw, to a little town in Poland I can't even pronounce. I am going for 2 weeks of volunteer work with the World Central Kitchen, which a lot of people have heard of. It's an organization, WCK.org, that's run by Jose Andres. You've probably heard about him. He's a restaurateur, very successful. But when there's an earthquake in Haiti or a hurricane in Puerto Rico, Jose and World Central Kitchen are on the ground feeding people. And I'm going there for 2 weeks. I'm not a chef. As I told them when I signed up, I will do whatever you want for 2 weeks. I will work whatever hours you want. I'm your bitch. These are my people. These are my people, Ukrainians and Poles.
Right.
And we need to stay together. So you want to know if there's anything I want to ask for? Send money to World Central Kitchen.
Do they accept cryptocurrency?
Huh?
Do they accept cryptocurrency?
I don't know.
You should have a QR code and start hitting that up on Twitter. I'm sure you guys will.
I don't know, but it's too expensive to transfer crypto. you have to give them chips.
Well, look at the Lightning Network, and you can send money for virtually no cost, but that's another conversation.
I hear you.
Steve, this has been an incredibly delightful conversation. I am so glad that I had this opportunity to chat with you. It brings back a lot of memories. Certainly an amazing story that I didn't know. And I'm really glad that you shared that with us, your early days of wrapping your arms around the Black Scholes model and being able to tweak it. It's one thing to understand it, and then it's another thing to actually put it into use and work it. And my gosh, you were ground zero, man. You were right there. And that was really, really an exciting time. The best days of my life for sure.
Well, I had fun too. It was good. It was good while it lasted, but now the market's efficient, damn it.
I know, damn it. We got to find some more inefficiencies somehow. All right, Steve, thank you again. And I will chat with you again.
Thanks, Bill. I'll be back in 2 weeks.
All right, very good. Godspeed, and we will chat with you soon.
Thanks.